Okay. Hello, everybody.
The broadcast is now starting. All attendees are in listen-only mode.
12:59, about to be 1 o'clock here in New York, so going to get started. Hello, everyone. How are you? Looks like I am already getting told that the video and audio is working out, so I'm just going to go right ahead. All right. So I mentioned via Twitter that I was kind of excited to show a Euro-Yen chart. So let's do that. I'll blow this up a little bit. This is, if you remember, get rid of some stuff here. If you remember the chart that I did, the video, I should say, from Kiwi yen a couple Saturdays ago, I started off with talking about a sliding parallel on Euro yen. And that sliding parallel is, the one here that was from the Pitchfork that we were initially trading, right, all the way back here in late December. And Euro yen started to break down. We got out at 142.50 thinking it was a great trade, and then the market continued to fall apart. But that slope, we didn't want to forget about that slope, right? And the slope came into play right before ECB, and Euro yen took another dive, right? Well, we actually just got that again last night during Asia. That same line came into play right here. So obviously worth following. If we zoom in, you can make the case for a 5-wave decline here. All right. So what I'm going to do is I'm going to go a little more granular on this Euro yen chart. So we've got that slope, right? Added this. I'm going to take that out for a second. We've got this Euro yen chart, and last webinar, last Wednesday, we talked about possible slope on an uptrend slope, an uptrend line, right, on the Euro yen. And what we have here, remember we were actually long Euro yen, had a nice bounce, and then, it was kind of taken out at break even after FOMC. This was FOMC, right? What was it? It's right about over here. It's right here. This is FOMC. This was FOMC right here. Sorry, right over here. And we ended up getting out, obviously, at break even. The market continued higher, but into resistance. So we talked about this here being an uptrend, possible slope for an uptrend. And if you went off the lows, it was pretty close. Okay, ended up more or less becoming support. So when you get a situation like this is obviously a range market now because you're stuck between a more dominant downtrend slope and a bigger or smaller uptrend slope. And you can refine this, okay? You can refine this by drawing this one, and then this is what gets exciting. You can see the slope that we have here, okay? Remember, the bold black line is daily reversal support. That means it's the close of the reversal bar. So if you look at a daily chart, the big key reversal bar that we had on, I guess it was January 26 or so, that close of that day is 133.10. It's actually 133.095. But just remember what the importance of those reversal bars are, right? Reversal, support, resistance, okay? Here on the resources page, defined as the close of the high period or low period in spot FX. It seems odd to close at an arbitrary time, blah, 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 but it's not. By 5 p.m., markets have digested everything Asia, Europe, North America had to offer. Therefore, it's agreed on price of that day, okay? So you'll see that a lot of these come into play. And as support resistance in the future. So why am I noting all this? Because this reversal support, 3310, comes into play tonight. You know, you call it late Asia, early Europe, basically, is when this is going to intersect, this uptrender here, with the daily reversal level, okay? You know, so in the meantime, you know, we are sitting at kind of I'd say kind of a no man's land, to be quite honest, but with a potential 5-wave move down, you could get a pop here. You know, if you want to get really short term on this thing, go with a 15-minute chart. You can obviously keep going in short term as you want. And put on something like this. You'd be looking at resistance at either the median line, the upper parallel, for a move higher, and then a drop into 133.10. Okay. Obviously, you can develop all kinds of strategies around this. You can look to sell up here at some point tonight or today if we get a late U.S. rip in equities. That's if. I have no idea if that's going to happen, but if we do, what you'd be looking for is euro-yen resistance from basically, I'd call it the spike, 134.70 to 134.80. It'd be interesting if we get up here by the end of the day. It's about 4:15 New York time, right after equities close. And then if we do get up there, you could have resistance for a drop into 33.10, and that would be support. So point being, there seems to be some actionable trading levels here in euro-yen in the short term. 34.70.80 resistance, roughly with 33.10 support. Now going back to, say, the hourly chart, again, we have the much, or I should say, very well-defined resistance level here, slope, right? But if we were to break above this level, that would be just as significant as, you know, trading off it, right? Strong support resistance, when broken, gets a strong move in the other direction. Okay. Dangerous always to predict something like that, but given the extent of the decline in the euro-yen and what euro-yen looked like at the low, there's a daily, if I go to a daily chart now, reversal here, okay, trend line intersects it tonight, that gives us support for potentially another move up. And then the fib, that you can see the fib that I have here, okay, 38.2 fib comes in at 136.66. A little too many sixes for my taste, but 138.66. And you also would get the former fourth wave high at 137.63. So given the near-term possibilities, you could get something like 133.10 and then a trade up into 130, 660 area before we get, a deeper decline. All right, and even then, that would be saying that this is a 1, 2, 3 momentum extreme 4, and then one more run at the lows 5. All right, all I really care about at the moment is this level here, 133.10. Okay, that's really it. If this area comes in, the market comes down here and gets support at some point tonight, it would be a level to trade off of. Okay, to position for along with the tight stop. Okay, so that's what I will be looking at going into this evening in euro yen. Now, what else? Obviously, it begs the question, why don't we look at dollar yen? So we talked about I put out a chart with dollar yen here today, right? Dollar yen's been obviously extremely quiet. Stefan says, what's the tight stop? Well, I'm not like issuing an official trade alert right here. I'm just, again, you want to see, this isn't like, I'm not saying that the market comes down, hits that level, and reverses. I can't really predict that. What I'm saying is the market comes down, you watch for it, okay? Something you want to trade if you're at the screen. Market comes down, you start to get some key reversals on the 5-minute chart or something, and then you would look to go long with stop under whatever the low is, okay? For all I know, it could crash through this thing. I don't know. Again, it's important for things like this. You want to have, let the market show you that there's support there. I'm saying this looks like it'd be great support. Okay, it cuts through a lot of congestion. There's slope line. You got daily reversal and all that. So it'd be a great level for a low within a choppy uptrend. But I don't know if that's going to happen, right? For me to put out the swing trades that I put out, like the ones that actually have orders in them, those are the ones that have several or additional factors in their favor, I should say, okay? That have momentum in on the right place and everything else, and there's a clean pattern. For this, for all I know, this is the three-wave rally. I don't think it is, just based on, again, what I said, the reversals at the low and all that. And you usually tend to go in a period of more choppy trading than just a week that's been going on here since the low after the decline we saw throughout, end of December and all of January. You usually get a couple more weeks than just, than just 1 week of trading on the upside or sideways or whatever. But just saying, watch that. I want to point that out. Watch for that. So here's dollar yen. Obviously been a complete chop fest. Okay. Hold on here. Brendan saying euro yen equal legs. Yeah, I don't think the rally is it in equal legs yet? I don't know if it is. If you see here. If you go here, 61.8. Equal legs would actually be 136.60, which remember is actually the 38.2 also, that decline, right? So that's makes the case even greater for 36.60 as big resistance, right? 38.2. There it is. 38.2 right here. 2 equal legs up. And 38.2 retracement. So, from a wave standpoint, what you could have here is actually something like an ABC, triangle X wave A, B, C. Just, kind of thinking out loud. And where you could get equal legs at 136.05, equal legs if we stopped right there, whatever. All right. Anyway, bottom line, 133.10, know it. Could be big support heading into tonight. Now, okay, this begs the question, right? If euro yen comes all the way down to 33.10, it's 100 pips from here, well, then dollar yen's probably going to stop out because our stop is under this level right here. Our stop's 117.15. I originally made the trade for 1740 entry and 1685 stop, and then was looking at some of these slopes, and one we saw we've got S&P equities overcoming some resistance levels, so it was like with the potential, there's several things I'm going to cover here, but with the potential for for a stronger move on the upside in dollar yen, right? This isn't necessarily impulsive either. The rally from here, from the low, I mean, it's more distinct as a three-wave move. So it's probably just the first part of what's still a whole big correction from the highs in December. But you can see that it does fit very well as a triangle, okay, movement. So, A, B, C, and then D, and you'd have two equal legs from here. If we stopped here at 1685, up around 1990, it's 1985, I think, is the actual level. So that's, is more like a pure reward to risk kind of trade. I mean, we've been chopping around for so long, and we've been looking for a bigger breakdown to happen. It didn't happen. The market's not doing what you expect it to do. It's kind of like, well, am I going to sit here and press the issue when we keep getting all these reversals down at the lows, right? If I go to a 4-hour chart, you can see it a little better, right? We have all the support. We break it, right? It's actually after FOMC. Break it. The market reverses sharply and start to get a bottoming pattern forming here. So, to me, this was, and still is, by the way, a false break to the downside, which means the market could be primed for a move higher. And, going off of some of the slopes here, this is still early in its construction, but this is the chart that I tweeted out here this morning. The fact that we do seem to have, there does seem to be some slope, the market kind of respecting some of these levels down here, right? It's a pure reward to risk play, okay? I mean, we either get stopped out, for a 50 pip loss or whatever, or this thing goes up 240 pips from here. And I think that's by Friday, right? NFPs. So I'm not going to worry too much about it. There's an old saying on that old traders used to say and used to tell me when I was planning an entry or something and talking, we talk about the market, and I was reminded of it last night actually with dollar yen when I said, change the entry to kind of buy 1765 with a 1715 stop. It was basically don't be and I'm not going to say the real word, it's kind of a bad word, but I'll say don't be a prick. How's that? But it rhymes with prick. But it was don't be a prick for a tick. Okay? And, what they're saying is, look, if you've got an idea and the reward to risk is there and, you're not going to get hurt too bad, just put the trade on. Okay? You see it happen all the time. You have a view, the market ends up adhering to your view and doing what you think it's going to do, but you're not in the trade because you were waiting for it to get an entry better that was 5 pips lower or 10 pips lower or whatever it was and never triggered, okay? So sometimes that comes into thinking. But anyway, DB says, to me, dollar yen looks like a series of lower highs on 4-hour chart. Well, you could say, I guess, this is a series of lower highs here. This is a closed chart, okay? But again, after we broke what you would call breaking support, the market immediately reversed higher. Okay. So there's plenty. You could go on either side here, right? From a wave count perspective, remember the wave count I presented last week? It was actually last Wednesday because it was after FOMC. This is definitely a possibility, folks. A, A, B, C, D, E, B, C, although this is really B because it's three-wave, it's really BY. Again, these are the things in Elliott that I don't really care for. You know, whether you call it WXY or a ABC or whatever you want to call it, doesn't really matter. All it is that everything here is corrective, okay, and that the thrust lower that we had and then the immediate reversal higher that we had all the hallmarks of, you know, a false break to the downside, okay. So taking that into account, along with the fact that the seasonals are actually bullish dollar-yen right now, and everything else, and, you know, S&P is breaking resistance and blah, 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 you know, I think there's plenty on our side to be on the long side for a little bit. What I really want to do is just trade this whole range. I mean, you know, we did, for the most part, back in January, look to trade dollar-yen range, and if this is, again, if this is still a triangle, then a large triangle at that, then we could get up all the way up to almost 120 and then trade lower again. Okay, so, you know, it's kind of just taking a shot. You take your shots when you can, right? So that's dollar-yen. Again, wait for it to announce its intentions. If it does so on the upside, then we'll have a very nice trade. If we're stopped out, we'll get stopped out. So that's where we are right now with dollar-yen. Who knows? Maybe it comes into this support at about 117.30 or so during our webinar, which is 10 pips away, and then goes higher. I don't know. Or breaks it and stops us out. Want to look at the British pound. This is a great example of, I talked about daily reversals, right? Support resistance on the euro-yen chart, 133.10 being a level, right? And let's look at the pound, because the pound, this was primarily, that's all this trade was, really, was trading daily reversal support resistance levels. Going back to last Friday, you know, we had talked about the possibility of getting, you know, a low near 149.90, 149.88 to 150.10, and sure enough, 149.88 ended up being the exact low, not just on Friday, also yesterday. Luckily, we didn't move our stop up. Our stop was left at 49.80, and the pound had one of its better days in quite some time. In fact, you know that this week is the pound's up this week about 1% at this point. It was up like 1.2 or 1.3% for the week this morning. This is the best week for the pound since last year at this time, since the week that ended February 14th, 2014. Okay? We're in a seasonally bullish period for the pound for the next week or so, and then things turn over again. That's part of the reason playing this. Again, I heard there was a question on the stream, on the squawk this morning about getting, this is the daily reversal support, by the way, right? This is the low, this is the close of that period, ends up being support. That's why the entry was where it was, and you know, we're looking higher. But there was a question about the daily, about the inverse head and shoulders pattern, right? And you can see it even better on a daily chart, on a daily line chart, closed chart. I'll say a few things about that. Sure, it is certainly a possibility, but I will also note the pound is notorious for false breaks on classical patterns, and we have a lot of resistance up here from basically 52.80 to about 53.20. Okay, 52.80 is the again the 50% range of the year. Okay, more accurately the decline from December 31st high, Okay, so it's roughly half of this year's range so far. We've been lucky enough to take virtually all of the last 2 days at this point. But we've also got slope lines, slope resistance up there. You might want to call it channel resistance, whatever you want, right? And again, you can see it very clearly. The slope off these lines, right, cut through here, actually cut through the low here at the end of January. In the future, we might pay attention to this line, okay, but the parallel, upper parallel from this line, you can see off of this one, cuts through a series of highs here as well. That's why I put the target at 52.80 today. Okay, the target was at 52.80 because 52.80 is that line today, basically right there. Now we didn't get it, so might tighten up the limit to 52.60 or something tomorrow. I do believe that there is event risk BOE tomorrow. Not sure if it's really supposed to do a whole lot, but for BOE. But in any case, hopefully it inspires some movements in both directions, and our limit can be up here, and we get taken out on that BOE. It'd be great. Yeah, Brendan say it could be a triangle. It could be. Sure, it could be, we get an A, B, C here, get another D wave, an E wave, and get another breakdown. Pound's definitely been one for the triangles, the running triangles, right? We had one at the end of, throughout the last month and a half of 2014 of last year. Remember, we had A, B, C, D, E, and then the market totally fell apart. So we could certainly get another one. In pounds, something to watch for. Euro yen we talked about, pound dollar we talked about, dollar yen we talked about. With Aussie dollar, remember when we looked at the thing here with Euro yen about the slope? This is just something to watch for in the Australian dollar. Again, I think that both commodity currencies, Kiwi and Aussie, have a little bit of kind of mess or choppiness in them to shake out market participants on both sides, to be quite honest. After you get big moves like we've had, a lot of times you see that. They can be pretty brutal intraday. I mean, you saw yesterday with Kiwi. Wanted no part of that. You're getting 50 pip moves, on the minute, and it's kind of not very, it wasn't all that well defined, to be quite honest. So, it doesn't mean you don't point out some levels. And, with Aussie, something to watch for one, we have this Pitchfork. You can see I have gray right here. I don't know why it's all the way over there. Let's see. Hold on. Okay. So we have this fork, and, in general, the lower parallel is okay at identifying some support, but if you look at if there's possible uptrend, support, or what's the slope, if the market's going to trade higher, how might it trade higher, right? In what manner? Well, right now we're holding the month open, but what I will be watching for is for the intersection of this median line, okay, and this lower parallel, which is simply parallel to the line here, okay, that was resistance before the rate cut, and then resistance after the rate cut, after the market took out everything on the upside. So the parallel to that, again, is right here, and there's an intersection there's an intersection between the median line and that parallel and the low back here, former low at 77.20 or so. And the 68 of this whole rally is like 77.10. So there's an intersection starting basically Friday, and it kind of goes through into Monday. So, with that reason, I'll, kind of forget about Aussie for tomorrow, but we'll, reference this going into Friday. So if Aussie can kind of get its footing and chop sideways for a little bit, it may very well be that we get an opportunity to get some Aussie down here either Friday or Monday, for a bigger, corrective movement or whatever it is to the upside in the Australian dollar. And on that note, where might the bigger resistance come in for the Aussie dollar, you ask? Well, if we scroll out, this is the channel that seems to be working. This goes all the way back to the September highs, okay? And, it could be that Aussie turns up and eventually gets back up towards, mid-February. You've got the 80-40 area. But the whole fib level, let's put it that way, the 50 to 61.8 of the latest swing down is 79.60 to 80.40. Okay, so obviously, if you're able to get a good entry, the market can go in your favor relatively quickly, as in right away, and that's really the idea behind using methods like this, right, is to find exactly where the market might turn in your favor quickly, so that you can move risk quickly. If we get that opportunity, then we could get an entry near 77, 77.20, whatever, with a couple hundred points of upside and say less than a 40 to 50 points of risk, right? So again, forget about Aussie going into tomorrow, but keep it on your radar, I think, heading into Friday's NFP report, and certainly after that on Monday. We'll look at Kiwi real quick too. Again, Kiwi, that trend line here. And again, I do think that Kiwi is going to be still a good short, but again, you got to have the right entry. We, had a really good short earlier in January and got out at 73.30. Ended up getting all the way down below 72 after the RBA surprise cut. This turn higher though, and the very sharp reversal we had yesterday probably put somewhat of a floor under Kiwi for a couple days. And we'll note the 70, same thing with Kiwi, right? Not as clean as Aussie as far as the possible near-term possibilities for slope and whatnot on the upside, but you do have 72.50 to 72.75 as possible support for Kiwi, and that's the 61.8 in the month open. Okay, so with Kiwi, I actually plan on forgetting about Kiwi for probably a week and a half. Okay, because if Kiwi can get, this is the chart from last night, right? But if Kiwi can get back up into 70 through 75.30, sorry. Hold on, this is not the chart I showed. The chart I showed was much cleaner. It's this one. Yeah, there it is. So if Kiwi can get back up towards 75.30, okay, you've got one former downsloping support, which could now be resistance, and this old guy here that was resistant throughout November, December, and then a little bit of support in January. Okay, you got a confluence there. Again, you're 75.30, 75.50, and there's a ton there. Okay, not only do you have the 50% retracement of the decline from 115, okay, or the high so far for this year, but you also have, if I pull up some pivots, the pivots here, 75.50 is also the pivot high area, okay, for this month, for February. Okay, a pivot high, by the way, so it makes part of the pivot zone. So everyone, you know what, for traditional pivots, you get the high, high plus low plus close, right? Divided by 3. So that's just a pivot point, right? Well, pivot zone, okay, also it gives you, just like it sounds, it gives you a zone, a pivot high and a pivot low. So a pivot high, you take, let's say that this equals pivot point, okay? Then we're going to say the second number equals high plus low divided by close, okay? Then you take the pivot point minus the second number equals, we'll just call that the difference, or diff, and then your pivot high equals your pivot point plus the diff, and pivot low equals pivot point minus the diff. Okay, and that gives you a pivot zone. So, give you some examples of pivot zones, like Euro, for example. See, like back in October, okay? Let's see here, let me get, I just want to show the pivot zones. That's what I'll do. All right, so pivot zones, as you can see, you've got the black line here, the little dots. I don't have them shown that brightly because they're not, but you can see the green is pivot, and then PL is a little dash below it, and PH is a little dash above it. In October, PH basically identified the high for the euro, okay? PH for this month for the euro is 15.90, all right? Look at the pound. Give some examples of the pound. Pound PH is 52.65. Dollar yen. Dollar yen. You can see just here a couple months ago in December, actually, PL got the low right there. Okay. So, again, it gives you a zone rather than just a price, and it's useful to know, especially the monthly ones. But anyway, that's New Zealand dollar this month. The PH is 75.50. It's good to know. Back in October, PH was 70 or 80.48. The high was 80.34, 80.33. So, you've got a nice little zone possible of resistance to work with there for Kiwi. Let's see. All right. So that was Kiwi. Could get some support down a little lower, as mentioned, 72.50, 75, and then potentially look for sell in a week and a half or so at 75.30, 50. This is the Kiwi dollar seasonality chart. It's only been a month and a week, basically, but it's following pretty well, right? Decline. Seasonality did call for a low to form after last week. And then you can see that the seasonals are actually bullish into the end of next week, right? So when we look at the chart of New Zealand dollar, where's this? Basically 210, 211, 212, right? 213. I mean, point is it's all basically the latter half of next week, okay, and that's exactly when the seasonals turn bearish again. So you have a nice price zone pattern. We've got the whole big double top thing going on, levels, the timing aspect. I mean, it's all kind of potentially lining up quite well for a Kiwi sell at the next half of next week, I should say. Let's look at the British pound. And we looked at the daily. It's been a good, couple days to be long the pound. Again, I'm much more likely to get out of this trade, or I have the target on at 52.80. I think that 52.80 to 53.20 could give the pound some problems, and at that point, you get a sharp, jerk lower in the British pound. But in the near term, if you want to be more active and trade the position, go to, it's a 15-minute chart. You might wish to, especially with BOE tomorrow, you might wish to follow this short-term construct, if you will, right? You've got support, from this median line got the low this morning during the London Open at 51.38, 51.40. That level is slightly lower here right now. Obviously, as time goes on, it increases. Let's see where tomorrow, 7 a.m., let's see where that comes into play. 2.5, I think it'd be the 8 o'clock hour or so. Yeah. So tomorrow, if you get a big drop after BOE, then you've got support potentially back at 51.10, to 51.20 or so, the bottom parallel. Otherwise, the median line's right there where we are right now. And then the top side, the upper parallel, which actually is right up here, where you'd have intersections with resistance, which is where we want to get out anyway, right? So still like taking pound a little higher to that 52.80 area. Maybe you can squeak out 53.20 again. What I said earlier, don't be a blank for a tick. So we'll be looking to get out at 52.80 on that remainder of that pound position, then see what can happen. And as Brendan actually was saying in here earlier about pound possibly being a triangle, yeah, we might be, who knows, we might actually have an opportunity to get a short position at some point if the pound acts right up here. It's something like an A, B, a C wave of sorts, or that could even be the end of a larger correction, okay? Because if you do get up to 52.80, it's not going to be obviously not going to be a triangle anymore. All right, let's look at Euro Aussie. Oh, wrong chart. Come on. I think I had on this one. So a few things here real quickly on Euro Aussie. Again, I said I'm going to forget about Aussie for a little bit, right, at least for a day. Euro Aussie jammed up into another median line. I still like the idea of buying Euro Aussie on a larger swing basis, but again, it's just like Aussie dollar, just like you might like selling Aussie dollar, but that doesn't mean it can't trade up a couple hundred more points, okay? So with Euro Aussie coming up into the upper parallel after the rate cut, faltering, you could get support here back at the month open, okay, on the median line, which was support right before the rate cut. But in all honesty, I'd be looking with Aussie potentially headed a little higher, potentially a couple 100 points higher, more likely to, again, just kind of forget about this for a little bit and see if you can get a bigger support sometime the latter half of next week back near the former fourth wave here of 144.90 area, 144.80, 144.90. Again, if you look at it from a daily close period, okay? I know that people have issues with this, but if you look at it this way, obviously you're getting a very clean, I think, visual of what might be going on in the waves. And at this point, you can say you have a 1, 2, and look, I know there's a spike low here, okay, so this is by no means some textbook look, all right, but 1, 2, and then a potential 3 up here. The risk would be for a decline back into the former fourth wave anyway. And then when we put that up, we actually have some intersections here, former fourth wave. If this one comes into play, it could be actually on Friday, but this one, the lower parallel from the fork, come into play on about, what is that, the 10th of February. Again, just as I talked about potentially buying Aussie after NFP, if you get that, we get that spike down in that confluence area that I was talking about. We have the same thing with the Euro Aussie, just the inverse, obviously. Remember, the daily reversal supports daily reversal resistance levels. The same thing can work on hourly charts, okay, to a much, it's much smaller degree, but same thing works, especially when you have big reversal bars. And we obviously had quite the reversal bar here at noon just yesterday, and that close of that day, 48.14, would be now a level you watch for resistance, and that happens to also be up near the region of upper parallels and everything else. So, might be worth considering looking at Aussie. We have an intersection up here around NFP at 48.55. Again, for me, in case you can't tell, unless there's a super, super compelling reason to trade a non-dollar cross over a dollar cross, I will usually trade the dollar cross. If I find myself, say right now I'm long pound dollar and long dollar yen, so I'm really long pound yen, great. But there's reasons for that. The biggest reason is obviously the importance of focus, and you just can't possibly focus on, like 50 currency pairs or even 20 currency pairs all that well, okay? Maybe if you're just analyzing them, if you're actually trading them and you actually have money on the line, it's a totally different story. And for me, since I do, I much prefer to, stick with, a core 6 to 8 currencies. Every once in a while, obviously venture out into, troubled waters or something, and, if there's an especially compelling opportunity or whatever, if a market's super stretched one way or the other, I'll take a shot at, a lottery ticket or whatever, but, as it is right now, I much prefer to just say, I'll trade euro dollar, I'll trade Aussie dollar, I'll trade dollar yen, I'll trade Kiwi dollar, trade dollar NOK sometimes, whatever. Stay away from dollar mix, says Stefan. Yeah, it's kind of been a piece, been quite annoying, I'll say that. But that's, that's kind of a philosophy. So, Stefan with the jokes today, I love it. Can we check out pound Kiwi, Sandeep? Sure. So, again, that's Kiwi in general, I kind of stay away from right now. I think it can get pretty sloppy. The trade, that is, on Kiwi dollar between, roughly 74 and 73. I think you can get a lot of slop in here. I'm not too keen on looking at a chart of Kiwi dollar. So, so that goes for Kiwi anything, I should say. until the next, latter half of next week, probably. Once again, that's big resistance up in the 75, 30, 50 region, and that's when seasonality turns down again. So to minimize mistakes, just kind of let Kiwi do what it's going to do. This could be an A wave. If we go into a B wave, we're going to get really choppy in here. It's going to be a disaster. Final thrust higher then, that would set the stage for a sell, for a larger trade, a bigger position. But because you asked so nicely, we will look at pound Kiwi. So, interestingly, I already have this drawn. This is a 240-minute chart. I'll say that it's, basically the same thing as looking at Kiwi dollar, right? I mean, you can see it. Kiwi is obviously the dominant pair with pound or Kiwi. It's a lot more volatile, right? We're like the old people right now holding a pound dollar long. The pound dollar is kind of like the old, what is it? What used to be really slow, like, I don't know, euro pound. But, we do have a couple hundred pips, so I'll take that. But we have a Kiwi dollar sharp drop, right? Just as we had a sharp advance, a sharp reversal from the downside in Kiwi dollar. So I'd be looking at the same darn thing here. Eventually, yes, I do think that pound Kiwi is going to be a massive shock, huge breakout to the upside. That's a monthly chart. You can see the insanity going on here. I mean, last month, January, in pound Kiwi, basically engulfed everything from last May. Okay? So I think this also, I just saw my audio was gone for a second. It should be back. I think that speaks to the fact that eventually, Kiwi gets totally murdered. The bigger thesis that, we've kind of been thinking for a really long time, but that sends pound Kiwi a lot higher. But obviously, the timing is awfully important on this. And so from that perspective, a couple levels to look at for support. Obviously, one is going to be this median line, which I think you'll have a much better idea of where it is once Kiwi dollar, cleans up its act and trades up into, I think, 75, 30, 50 resistance. But if I were like just looking at this without thinking about the Kiwi dollar, I would recognize that here we have a daily reversal resistance right there. Look at that. That's the close from that day back in September. The high was on it yesterday, very close to an upper parallel. Possible fork. This adds, you get a little weight on this because we did find resistance up here. You have a heck of a spike bar here. Okay, so this probably caps the market for a little bit. The first place you'd be looking at for support, again, probably is going to be this median line, which ends up cutting through some consolidation here at the very beginning of the year. Now, if we want to go a little shorter term, say a 60-minute chart, and if you wish to, to trade this to the downside, which again, I'm of the mind that commodity currencies over the next, at least week and a half or so have a little outperformance to do. You can see that you have a potential downtrend developing within, within this construct here. So look, don't overcomplicate it. Basically, resistance up from, that spike that we had here up to about the month opening price. So that puts it about, 207.65 to 208, okay? And then would look to potentially ride this short-term fork to the downside, but noting that the first support probably comes in, at about 202, all right? Because that's where you have an intersection between the downslope, shorter-term construct, and then the, upsloping but not extremely sharp, or steep upslope, not extremely steep, I should say, but it still is an upsloping, larger, longer-term fork. Okay, so that's what I'll be looking at with pound Kiwi. Talk about crude oil real fast. I put a video up yesterday on Daily FX on crude oil. Talked about, obviously we had an insane rally, right? Market came back. It stopped at where it opened the year to the tick. It's the magenta chart or magenta line. And now we're riding. This is a very short-term intraday fork, but we're riding lower. Crude's down almost 8% right now. It just cracks me up. Yesterday the whole mainstream media gets all jacked up over the rallying crude. Dow's up 600 points in 2 days. Every talking head on CNBC saying that stocks are higher because crude oil's higher, even though a week ago stocks were lower because stocks were higher because crude oil was lower and it was good. The narrative changes every hour. So, point being, don't listen to it. But trade-wise, I'd pay attention to crude. All joking aside, look, this is obviously a very involved market right now. There's a lot of activity going on in it. It's very emotional, so it's worth watching. I don't think it's a coincidence that the short squeezes in the euro and crude oil happen basically simultaneously. So, we're looking for euro dollar support down a little closer to 1360 to 1380. And incidentally, crude oil actually has its big support, I think, is probably about where the month open is, which is 47.60, okay? And that level actually could come into play over the next few hours here, okay? The NYMEX close is in 33 minutes, so, for all we know, we could dump for the next, 33 minutes, and then crude oil finds support, and that could give us another, downdraft in the dollar, most notably updraft in the euro, which has been a very crowded trade. So that's something I would watch for on crude at the moment. Watch for that possible support at 47.60-65 right here, okay? So there's crude. Gold's been pretty quiet. It's kind of sitting on a support shelf, not really doing a whole lot at the moment. It's important this holds. I think it probably tries to hold and bounces around for a little bit, but eventually we could get down to the 1234 region sometime next week. And finally, the S&P, it's just kind of riding higher on this slope. It's been a really boring day in the S&P. So, don't make too much of this, I guess. I was expecting the market to open and kind of get a sharp drop into 20, 25 and then go higher, but instead it opened, didn't do anything, went higher. Now we're basically unchanged. Market's down 3 points right now, not a whole lot going on. But, for levels analysis, I would actually know, especially for tomorrow, there's 2017 in the S&P as a support region, okay? And Adrius, yeah, asking absolutely about the euro-yen chart. Sure thing. So again here, what I'll do is I'll draw it from scratch so you can maybe go along with me and draw it if you wish. Okay, so this is a 4-hour chart. Okay, we're going to go back here to the high in November. We're going to draw a pitchfork. We're going to take it to the three pivots, 1120, 1123, I guess. This is a 4-hour chart, and then the 12.7 high. So it's actually the 12.8 high because it's 12.8 trading day. This is actually the 11.24 trading day, and this is actually the 11.20 trading day. Okay? So we'll draw those. Now, what you want to do is take parallels. Now, if you use Market Scope, there's no parallel function, so what you want to do is just draw the line manually on the chart, and then you can move it. Okay? But if you have TradeStation, then just draw a parallel, get rid of everything except for the handle, and then you can draw the sliding parallel. Okay? And the sliding parallel that we've been watching is this one. Right? That's been resistance, resistance, resistance last night. Okay, now, actually here's another, I forgot to show you guys this. If you take this, you can actually put it here too. That was, you can see that was resistance there, 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 there. So now you watch for this to become support. And then draw this one. Trend line there. Trend line there. Trend line there. And finally, you want to have 133.10 down because that is the daily reversal support, 133.10, 133.095 to be exact. Okay? And there, right there is 33.10. So, this is why I think you could get support tonight around 133.10. Okay? And again, the fib possibility, 136.60 area, we could get something like, a drop and then a heck of a pop over the next few days in euro yen. And, in yen crosses in general, this is certainly a possibility. I mean, look at pound yen. Pound yen, and this is, something I talked about earlier about being, already long pound, and we got long dollar yen, so I'm like long pound yen, synthetically, right? Well, one thing is I don't know, if they're both going to work, obviously. I don't know if pound dollar is going to go up a lot, or dollar yen is going to go up a lot, or maybe pound dollar doesn't do anything, dollar yen goes up, or, maybe dollar yen falters and pound dollar just goes nuts. I don't know, but when we look at it like this, look, this is a potential, don't overcomplicate it here. I mean, there's a 200-day average under here too, okay? And pound dollar has just broken out to the upside on a pretty nice big bar here. So there is a potential for a pound yen breakout to the upside, okay? So look, we're basically in that trade. Something else I wanted to show you guys too. Forgot what it was. What was it? Oh, I know what it was. So this was another thing. I'm going to talk about dollar yen again. Hey, thank you, Adrius. You have a good one too. I want to talk about dollar yen as well with with just RSI, okay? So a few things here. Look, we know that, RSI, many use it as a range indicator, but it can be used very well as a trend indicator, right? We've talked about this before, but you get bull market lows tend to get, RSI dipping into 50 or maybe 40, but that's about it. So we obviously got that here. Okay, obviously got that here. Okay, now since then, since this, obviously RSI hasn't done anything. Well, because price hasn't done anything, of course. It's what RSI is based on. But my point is that we're still holding this level. So for all we know, we could get, a rip higher, because this is still on the daily chart. This is still a a momentum or a bullish profile for momentum for RSI. Okay, we have not gotten oversold yet on the daily. It's not like the indicator's faltering at 60. It's in fact just sitting around its support region. And if I change this to a 4-hour chart, go another degree down. Remember here, this was back in January, and we were following the analog from the prior January of last year. When we were right here, talked about looking for RSI to falter. Okay, after we got oversold, I was bearish, right? Not here, but bearish for a bounce. So, because we were looking for RSI to then falter near 60 to get bearish again. Okay. Well, we got that. RSI faltered above 60, but below 70. But the market didn't fall apart. It just went dead, sideways. So, since then, you don't really call this a bearish or a bullish RSI profile or momentum profile. This is a flat range profile. That's all it is, right? Market's bouncing between 40 and 60. So this is another reason to look for a position for a bounce, is that the latest move here is off of the 40 level. So we were going to potentially look for a 60 level. Now I do think that if the market does turn higher and we get up to the 1980 area and are lucky enough to ride it, I do think we'll actually end up trying to short up here again. Okay? But obviously getting ahead of ourselves on that one. So one way to look at dollar yen. Also, here's the Nikkei. All right, the Nikkei, this decline. I go 60-minute chart. This decline in the Nikkei. This is obvious. This is not an impulsive decline. This is about as corrective as it gets. 3 waves down, sharp advance here. So look, opportunity for a dip and then a rip. Of course. Okay, if that happens, then might have to try to get in dollar yen again. But there's a lot of things lining up for a possible upside burst in the dollar yen, rather than a complete, tank job. All right. Okay, so that's it. Thank you all a ton for attending, and I hope you enjoyed this week's midweek webinar. We'll just do a very quick summary on the stuff that we are watching, trading, etc. So euro dollar, still looking for support region down near 1360, 1380 to take it up to 1590, maybe even 1660. Pound dollar, we are long, and I'm looking to get out 5280 again. There's certainly the possibility I get it of this inverse head and shoulders playing out. I personally am going to get out at 5280 if it trades there, based on the fact there's upper parallel channel resistance from 5280 to 5320. Dollar yen, currently long. It's not really doing a whole lot. We've gone over it a bunch. Whatever. Dollar yen is just doing its own little thing, which is a whole lot of nothing right now. Dollar NOK, don't forget about that. I didn't really talk about it today, but we're going to be tracking this median line up here for a potential sell, potentially near 765, 767 over the next few days. Euro yen, pay attention to 133.10. And Yeah, and Aussie dollar, we'll be watching for potential support starting on Friday, but going through about Sunday and Monday down near 77.20. And forget about Kiwi for about a week and a half. Want to see if it can trade up to 75.30.50 for the next big short. All right? All right, awesome. Dale asking about the long entry on Euro. Yeah, still valid. Looking for that long entry on Euro. All right? Okay, guys. Take care. Have a wonderful rest of your week. We'll be out with the update later. All right, bye.